is all about the green hands. Now, we all know the bull market is here to stay. Money Mitch. What's going on, traders? I hope you guys are excited and getting ready to go ahead and get at it. Let's talk about the stories of the week. And of course, bring on my man, Christopher Udall.
Boom!
What's up, man? How we doing?
Thanks for having me. I appreciate it.
Well, if you guys don't know who Christopher is, he has a show right here on Benzinga. It's only one time a week, so don't miss it.
For now.
It's on Wednesday at 4 p.m. Right before I actually, Christopher was doing so good that I actually added another Money Mitch after him, trying to jump on his momentum. But you guys check it out, why that momentum exists. On Wednesday, he does some great live back testing. And one of the things about back testing I think is important is gaining an opinion, right? Because that's what it's all about. I mean, once you do the back test, then your opinion really starts being determined. Then you're going with your objective system. But one of the things that I like to do here, and that's why we do this Friday edition of Money Mitch, is to talk more about opinions that are out there in the market. Why? Because I think at the end of the day, it's really great to hear perspective from different traders and kind of hear the different sides that they're looking at so that you yourself can kind of use that and then talk about it amongst your other traders, because we all have our friends that kind of trade also. And then we go into the Monday with a fresh mind looking at the market. Let's go ahead. Let's talk about some topics. First thing I want to talk about is, of course, what's been on a lot of people's worries. I mean, I even saw, I don't know if you saw it, but there was a lot of people that quit, Christopher. They even called, in the labor market, they called it the Great Resignation. So can you imagine? I mean, consumer pricing jumping to 6.2, the biggest inflation surge in more than 30 years. What are you thinking about the inflation right now, Chris?
Dude, I don't like to talk about politics, but at some point politics crosses over into my pocketbook, and I don't like when that happens. I'm just saying, I am not affiliated with any party, but I personally vote with my wallet, right? And right now, I don't know who you could vote for or vote with or anything else, because things are raging out of control. But at the same time, Mitch, last year when you got your stimmies, right? Mm-hmm. And everybody watching got their stimmies, wasn't that just a little bit in the back of your mind, like, doesn't this like add to the money supply and like just printing money out of thin air? Isn't that what like inflation is? And now,
isn't that what you can just do, Chris? Like,
dude,
worries come, right? You just print it.
Yeah, I wish. But I feel like now we're kind of paying that debt for maybe taking that loan out earlier on last year. And unfortunately, it's going to hit the middle class the hardest, right? The people who got those stimmies and really benefited from it.
Yeah.
When all of your prices go up, your meat, your milk, your commodity goods that you're used to paying, a certain amount for, your gas, everything else going up, what are you going to do?
Yeah, so, that's what most people never think about. It's not just how it affects future purchases, but also how it affects already the purchase that you probably made. One of the most important purchases is, right, a lot of times your house, right? And so a lot of people are going through this battle right now where they probably, especially, there's a lot of people that bought houses in the pandemic. And going into that, they probably never expected to see their purchasing power go down so much, right? And that's what really happens in inflation, is that your purchasing power that you thought you had is no longer there anymore. And so every time you go to spend, you're spending more and more for the same item and getting back the same product. It's not like you're getting back something better. And so I think I'm really starting to get concerned, because I know that some people don't worry about the inflation, but I think we're really going into hyperinflation.
That's scary, dude. That's a scary thought. Could you imagine where it's like Venezuela, right? Imagine you work a job. Maybe you have a salary job. Maybe you make $75,000 a year. That's a pretty good salary, right? Now imagine we hit hyperinflation, and that $75,000, like that used to, pay for your food, your housing, your children, your childcare, all that stuff, now doesn't. What do
Mhm.
you do? Right? That's the scary part to me. If it no longer covers what it used to a year ago and we hit a hyperinflation mode, what do you do? That's scary. I don't know. I am not brilliant enough to be in Jerome Powell's chair. That's why I'm in this
Yeah.
chair. I don't, that's it
Yeah.
at the end of the day.
Hey, well, one thing that I did notice, and I talked about this before the pandemic started because I started seeing talks about this, was that the feds were looking at a tool that the Japanese bank uses, which is a curve yield, and essentially curving the yield so that essentially it can go below zero. This is something that I still think the feds have in their toolbox that they mentioned in the midst of the pandemic. They talked about that they potentially could talk about this, and they said that it could be beneficial. So I think that's one tool that they still have, which is what Japan kind of tried to do to fight inflation. So I'm just keeping
Mm,
that in mind, just because I think the feds are going to have to pull some tools. They're going to have
yeah.
to figure it out. It's not just going to be we can just raise interest rates, because what's going to end up happening? We'll take
Everything
the
gets more
market.
expensive still, right?
And we take the
Yeah.
market, which is what, of course, everyone's worried about. Everyone's worried about, market keeps ticking on up. Everyone's worried about that big drop. And a lot of that worry comes from, I mean, we're in the best times for stocks. One Times are going to change eventually,
Hmm.
right?
Right.
I
Yeah.
mean,
We're never going to see, hopefully, fingers crossed, another COVID situation, right? That tanked the market. And then it was fed by all this stimulus money that like doubled. It literally doubled, right? Over the course of less than a year. I don't think we'll ever see that again. But the other side of the coin is, let's say they go too far, right? Let's say that they've erased all inflation. Now we're looking at deflation. And initially you're like, hell yeah, this is perfect. I need me some deflation, right? But then that spirals out of control potentially faster because now people are waiting to buy. So people are cutting, or companies are cutting prices. And so that's a cycle that feeds on itself, right? So I'm going to wait to buy my new pair of Nikes because at the end of the week, they may cost a couple dollars less. And then a week later, you know what? They might be $10 less. Another week goes by. So that can spiral out of control and actually work against the economy because then no one's buying anything because they just think prices will keep coming down. So yeah, it's a precarious slope that we're on, Mitch, right now. I wish I had
yeah,
an answer.
I mean, there really is no answer. I mean, the answer is, uh, what are we going to do from the top to fix this inflation? Because I don't think it's going to be one answer. And one of the things that I think is we're going into is that we realize, are we are we really even pushing back on the inflation? No, I think, there was so much talk how the feds were like, it's transitory, it's transitory, it's transitory, that actually made the consumer think it was transitory. And so they were thinking, well, I mean, inflation, schmation, it'll be gone in a year or something. But as we can see, it's roaring its ugly head, and it's still going to be around till next year. You heard it from Powell. He realizes it's going to be around for some time. And the real questions does it get worse in 2022?
I think we need to get people back to work, right? Once we get everybody back to work, getting somewhat near that unemployment and workforce participation at the same time. Two different metrics here, right? The unemployment is gone down, and so there's some political parties that are bragging about how they've fixed unemployment. Well, the workforce participation has plummeted.
Yeah.
Once we fix that part, hopefully we can go back to normal, I guess, if you want to say.
And that's a tough area because we
Yeah.
start talking about the wage battles that were created. A lot of that created with the presidential runs of both Trump and Biden, and now you're seeing the effects of those talks of higher wages come into our everyday life, right?
Mhm.
Let's go ahead. Let's pivot a little bit. Let's go to something a little bit different. Let's go to Disney Plus here. They had a slowdown of an ad of just 2.1 million subscribers, missing the Wall Street expectations. And I mean, there's a lot of talk. Some people say that Disney doesn't have the content to really compete with giants like Netflix. But what do you think here? Do you think that this is just kind of a bump in the road, or do you see kind of some more troubles down the road for Disney?
Here's where my head is at. As an adult that has 2 children, Disney Plus is on to satisfy the needs of keeping my children quiet. Let's be honest here. But, me as a grown up who pays the bills, I need to see people making content that I want to go and see, right? And for me, like The Mandalorian was massive. Like it was a family event in my house. We couldn't wait until the next Mandalorian episode came out. And then you turn it off for a year, right? And maybe more because now they're doing like other spin-off series along with that. And I think that where Disney always wins is in their content, right? Their content is always top notch and they drive people to come watch that content. But if you go a year in between your big blockbuster content, I mean, what would you expect? The slowdown is going to be there, right? So you've got to find a way to keep enticing people to come back, right? It's not going to be those Nat Geo programs that you said you and your girlfriend watch, right?
Hey,
you got to have those blockbusters. You got to have the
that is
familiar
true.
names, and I don't know what it's going to take, but it's going to take like a superhero series that everybody wants to watch, or something like The Mandalorian that captures pop culture to get them back to a faster growth, right? But there's always going to be a saturation point, right?
Yeah.
I mean, there at some point everybody has Netflix and they can't grow. So that may be where we're looking at with Disney, is that they're starting to reach their own saturation point.
Yeah, one of the things is, of course, when I compare them to Netflix, I'll always think that, well, does Disney have the international reach that Netflix eventually achieved? And with that being said, Netflix went a lot to the Latino community and were able to have massive success in the Latin American kind of content that they have. I think this gives them an advantage over a company like Disney, because you just don't see that content coming out tomorrow, right? They try to do some like kind of playoffs with bringing Spanish culture into Disney, but it's still an American film, right? And so I think this is where Netflix made the right move. Realized that the growth in the United States was always going to be capped, and started really working on international. This is where Disney needs to go next. So how do they do this, and how do they accomplish this? Of course, I think Europe is going to be maybe easier than, let's say, South America or Central America first. So look for them to try to really push into Europe. That's what I'd watch. But one thing that Disney did talk about was, and I think that is a bigger concern, is really, to me, the movies that could get released straight through the Disney Plus platform. We've all know the AMC battles. That is the key here, because the driver to the early subscribers, I don't think only had to do with the pandemic. It also had to do that the movies were coming out on Disney Plus. And the way that it seemed that every single next movie that Disney was going to make was going to also be on Disney Plus. But this has not turned out to be the case. They started going away from this, and now they're starting to think of, okay, so what we'll do is we'll release it to theaters for 30 days and then bring it to the platform. And this, to me, isn't that exclusivity that it had prior. That exclusivity, I've paid attention to that word more than ever this year. And I think that's so important. When companies can have exclusivity where there's no other option, or if the option was like in the pandemic where it was going to the movie theaters and put my life in danger, or sit at home and watch a movie, what would you do? You're sitting at home and watching that Disney movie. But
I'm still sitting at home. Like tonight, my family, we found out yesterday, Clifford the Big Red Dog. You remember that from back in the day? That's a movie now.
Yeah.
We're planning
Live
on
action.
Yeah. I'm fortunate enough where in my home we have a movie theater room. And like we're going to get pizza, we're going to get popcorn, we're going to be loud as hell in there, and we're going to enjoy ourselves And I think more people, because of the fact that they can get these new releases, right? I'm going to save at least $100 by staying home and enjoying the hell out of this more than I would sitting in a theater, telling them to keep my kids quiet, right? Buying $25 popcorn and things like that. I love the idea of streaming everything from home personally, but I may be in the minority. I also like the theater experience when it's James Bond, when it's Kong versus Godzilla, right? The theater experience makes sense for that. But when it's like, a family movie, I'd much rather stay at home. And that was something else I wanted to think about on Disney is think of it like this, right? If Kia, the car maker, came out with the most dope ass fancy, like over the top luxury car you've ever seen, would you still buy it? Probably not, because it's a Kia. So same thing in the adult market, right? Would you go watch Disney Plus even if they had the best content out there? Maybe not, because Disney's for kids. So you relate those together.
That's
Yeah.
what I talk about sometimes. Sometimes I feel like the adults try to make Disney Plus for them. And I'm like, you're trying to make it for yourself, man. They're not targeting you. They just want, what they want? Get me Disney Plus.
They want the Dolphins?
What do they want? When you get that tug in the back of your shirt, hey, get me Disney Plus. That's what they want. They want the kids going up to their parents asking them, I want to watch Disney Plus content. Can you get me Disney Plus? And if they get to the kids, that's all they need. Because at the end of the day, I'll tell you one.
They compete with themselves too, right? Because there's still the Disney Channel, still Disney Junior Channel and all that. Well, just go tell Dish Network to take a hike, remove all your stuff from there, from all the cable networks.
Bring it on over.
Bring it on to Disney Plus. The only place you're going to get all the Disney is at Disney Plus. Come sign up now. 3 weeks free, whatever.
Hey, we'll see what happens with Disney Plus. It's definitely an interesting thing. Now, one thing to mention from this, they did still reiterate their guidance forward looking towards, I think it was 24. So they just see it as a bump in the road, at least the company. Let's go ahead. Let's transition. Let's get into the next one. Of course, early in the week, and this was early in the week, this was mainly on Monday, that it was the infrastructure craze. I mean, everything was infrastructure bill. What stock could I find that be a part of it, and what could come out of it? So, I mean, now it's just the question of, was it more a kind of buying the rumor kind of thing and selling the news, or do you continue to see kind of the effects going into the next year, Chris?
So I think that move is over. I actually I was on TV a while back talking about all these stocks that were popping off. And I was like, if you look at what they are all materials that feed into infrastructure pieces, right? And now, it's the buy the rumor, sell the news. The news has happened, right? And that's how things work. And now the only place where there are buyers are the laggards, right? But they don't have that purchasing power to bring in the moves that the early adopters, the people who were paying attention, would have done earlier on in the year. So yeah, definitely, in my opinion, it's a short-term pop based on the bill getting passed. And now I'd be looking for something else, really. What about you?
So to me, I was looking at a couple of plays, and I'm still in a couple of these, full disclosure. So I'll try to make sure that if I name a ticker, I'll let you know if I'm in it or not. But to me, one of the things is I'm not really even looking at this as an infrastructure bill. You know what it really is called to me? EV bill. Because to me,
evil? Is that what you said?
Evil bill. Evil bill. Well, maybe it isn't. But yeah, EV bill. Why? Because that's all I'm focused on. The next decade, I think that we're going to look back. We're in 2021, right? Christopher, I think in 2030, we're all going to look back and be like, man, what EV plays did we miss and not invest in and missed out on a massive gain for 10 years? Those are the moments where, like, we do a show, Pre-Market Prep, where we have a trader named Joel O'Connor, and he's been, long-term trading for a long time. And some of the gains, like he says, he just doesn't sell them because he doesn't want to pay the taxes because it's so high up. And those are the kind of things that I don't want to miss out on. And so a lot of times I think of what can we find to invest in 10 years from now. I know it's hard to think 10 years from now, but you don't play one play and you don't load the boat in one play. You just diversify in an array of plays and an array of areas. Like I was thinking battery plays, charging stations, a couple EV names. Why not take a flyer on a couple of those names? Call out some like at home charging, like Wallbox, things like that. I think you have to at least dip your toes in these because you don't want to miss the big ride up. Because when it comes, I do think that there will be a high adoption of EV, and autonomous vehicles are going to definitely play into that. And I think it's going to be such a fast wave that you're going to miss out on it a lot. And you're going to have that FOMO kind of boom. And I want to get in early and look in 10 years out.
I like your strategy there because you're thinking about, with the gold rush, the people who really made the most money weren't the 49ers heading out there. It was the people selling the picks and shovels and all that stuff, which is what I'm conceptualizing as you're going through and talking about the charging stations and the batteries and the components. Yeah, that's clever to me. Now, you look at something like, is it Rivian that came out this week?
Mm-hmm. Yeah.
They have like $100 billion valuation and they've sold like 100 cars.
Yeah, no, not really much.
Crazy.
No, I mean, worth more than Ford and GM. Just pointing that out there.
Yeah,
worth more than two of the leading OEMs that have been making cars for over 100 years.
Makes sense. Total sense.
Total sense, right? Right. No, I mean, it just goes to show you, are we in 99? Is this 2000? What's going on out there? Definitely we need to go and question it because there is some evaluations that are getting out there to what you heard about in the 99s when you saw stocks trading on forward PEs of over 50 to 100 sometimes. I mean, those things are unheard of. So keep your eyes out, guys, because if we start seeing those things, it's always warning signs that we're in the late innings of the bull market versus the early innings. Let's go ahead. Last one I want to get into is a funny one here. So is it the altcoins or shall we say the shite coins here? What are you thinking, Christopher?
All right.
Have you even let's just put this out there. Do you have any crypto investments?
Yes, and this is why it was on my mind this week. So I have a little Ethereum and I have a little Bitcoin, and I kid you not, I actually so TrendSpider's the charts that I use, and I contacted their help desk, and I'm like, how do I look up Shiba Inu on TrendSpider? Because I don't even know how. And I was like, you know what? I don't know if it would be a bad idea to get a couple dollars worth of these like stupid garbage coins that are just blowing up. Because, if I could throw a couple dollars at it and it works, why not have a little fun with it? So I went in my Coinbase account and saw like how much I could get in Shiba Inus from my Ethereum, which isn't much. And I was like, that's a hell of a lot of commas and zeros and numbers that I could get with this. And I'm like, but if we had one move, right? Like I totally went full FOMO boy, right? Full Reddit, Wall Street bets idea, right? And so like a good trader, I pulled up my charts and I was looking at it and it's downtrending. And I'm like, well, you know what? Here's what I'm going to do. If it decides to turn around and starts breaking up, starts looking good, I'm going to get in. Dude, since that time, it's lost like 40%. And I'm like, well, maybe that was a good idea to stick to how I actually trade. So yeah, this market is kind of hilarious to watch. And having just a smidge in the crypto world, I think it'd be fun to play. But I mean, look at the Squid Game token that like disappeared, right? That is crazy. That's
I'll tell you a story about that one, Christopher. I actually was the the very morning that the Squid Game coin fiasco was going on, right? I actually saw it up for like a good 70% in the morning, and I was like, you know what? Should I take this? I almost got it, Chris. I'm telling you, I was this close to getting in. Why? Because it made sense. I was like, you know what? I haven't even seen Squid Games, but I know these guys are gonna buy it. So
Yeah, yeah.
it's the psychology game. That's
Mhm.
what this is all about, guys. When you think altcoin, don't think the value of the coin. Don't think the utility of the coin. Think psychology. Do
Yeah.
these traders want to have this in their account? And is there cult-like culture in this coin? Cult-like culture, you know what it does? They just follow.
Mhm.
And if they follow, what do we want to do? We want to be a part of that. I don't mind.
No.
Sometimes we need to be a part of the herd, right, Chris? If the herd
Sometimes you
want,
do. There's nothing
if
wrong
the
with
herd
that.
wants to take
Yeah.
it, hey, let the herd be the ones that make the opinions. We can be traders and we
Yeah.
can make the money, right? So perfect example was, and I'm still kicking myself, but a little part of me is happy that I did this and mad at the same time. When Doge first moved, the first move of Doge at the beginning of the year, it was in February. I remember one of the things that I was thinking was, are all these GME and AMC traders, are they all going to shift their money to a place where they can't get it?
Right.
And the place that they couldn't get it was, I thought, okay, so they go to the cryptocurrency market, right? It's decentralized, right? They can't stop the buy button in crypto land.
Fair point.
So that's what I was looking for. So the next day I wake up, it's already up like it was like 65, going up there towards 100%. And I'm just telling Benzinga, let's start writing. Let's start writing, guys, because I have this feeling. This thing's going. And it was the psychology of it. It wasn't that, Doge was worth anything or had any utility, but I knew that if it started running and the other traders had already seen these massive runs, what were they going to do? They were going to start rotating some money. Why not? Why not take the shot? You're seeing parabolic stocks.
Yeah.
A lot of times what happens is retail's just looking for the next one.
Yep.
And they're waiting. They're just literally like, "Oh, it's right there. I got it."
Yep.
And they throw their whole account at it.
Yeah.
Not like they're throwing like, 10, 20%, trying to get a little piece, add a little piece, add a little piece. No, 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 no. They just go all in at once. They're just like full in, boom. And so was the reaction that you see in these stocks and these altcoins when they do go up. It's what? You search it on Twitter and you see 500 tweets in the last hour.
Mm-hmm.
That good signs. Those
Yeah.
are the signs you need to be looking for. So if you
But
want to
also
look
the
for
signs
these,
to be nervous about, right?
that's
Right.
the
Be
hard part.
cautious.
That's
Yeah.
the same thing that happened in the Squid coin.
Yeah.
It was that it was being that the trend was there. And so what I think I've determined is that it's okay to have that side YOLO money. In this market, it's important to maybe have some YOLO money.
Yeah.
Maybe it's not a lot. Maybe it's a small account. Maybe it's something you're willing to lose, but there's nothing wrong with taking some spin if the herd is going to keep doing this. And the herd's been shifting. It went
Yeah.
to crypto,
Went to
NFTs.
Yeah.
It went from SPACs to crypto to NFTs. Does it go back to SPACs? We've seen some of these SPACs run, right? They're talking about one right now in the chat, GGPI. Why? Because it's Polestar. And Polestar is related with Lucid that has been talked about that it could short squeeze to hell.
Mm-hmm.
We'll see what happens. But I think right now and I've started to understand, I think, more and more how these traders are thinking and the psychology of it. And there's nothing wrong with trying to get rich on one trade if that's the type of trader that you are. And that's what happens with the financial markets right now, is that you're running into people like Chris and I that are trying to be here for 20, 30 years. That this is what we love doing.
Mm-hmm.
Like literally, guys, like this is what we love doing. And so we respect certain rules that have been written in finance for years and years and years. But with those rules, sometimes, right, Chris, we got to throw them out the window.
You know what? If you got a little bit of Ethereum that you want to convert to a Shiba Inu, why not? But
Why?
I ain't putting my big money in it.
Yeah,
That's
that's the
that's play
smart.
money
That's the
right there.
smart.
Yeah.
But at the end of the day, who are we to always say that the rules always bound the market, right? The
Mhm.
rules, no one bounds the market. That's the truth.
No.
And so with that being said, you guys that are out there, and if you're an ape and that's what you're looking forward to, and hey, I see it all the time. I'm seeing people quitting their jobs because they got rich on a coin. Hey, power to you. If that works for you, I always say just worry about the downside risk. Always consider what money you're putting in there. And so I'm doing the same. I don't mind taking some YOLO trades. I think Chris, you even saw me take AMC the other
Mhm.
day, and that's what it's about. But I'm going to be a little bit more rule stingent with my AMC trade. Like I took a small gain this week instead of staying in it because I missed a move. Instead of being stubborn and being like, oh, it's going to get back up there, just took a small win and I'll look for a re-entry because
Yeah.
I have the rules that I'll stick by. But if you guys want to be just YOLO, hands up, I'm going to be in all in or all out, then hey, power to you. And if it works, it works. And if it doesn't, then just know the probability of getting rich in one trade is very low. We all know this, but at the end of the day, we all want to get a big step forward, and we only live one life. So I
Yeah.
can't blame you for
As
thinking
far
that.
as like the crypto trading and stuff goes, like if you just first off have like a sound methodology that you work with in stocks and then just apply that to crypto, like I was just talking about a little bit ago with Shiba Inu. If Shiba Inu had actually shown the exact same criterias that I look for in a stock, I would own some right now, Mitch. That's the end of it, right? Because I'm
Yeah.
a price trader and that's what I care about. And the fungibility of NFTs, that scares me, right? The fungibility is what you want. When you take away that fungibility, I think there might be a lot of Squid Game-esque results that happen with the NFT world, and that concerns me a lot.
Yeah, it's a hard one. I've been in it, and I have some NFTs, very low valued NFTs, nothing crazy, but I agree. It's very hard. It me myself as an investor, it's hard to think of things like I'm going to make thousands of percentage because at least from what we've been told, that's very unlikely. And so that's what you're seeing in the NFT world, and that's why it kind of drives this craze.
Mhm.
Because if there's anything that drives craze, it's going to be massive success and massive failures.
Yeah.
So right now we've seen massive success. I just hope we don't see massive failures. I hope that certain projects actually hold their value, because then that would at least hold the asset as something that can hold value, and we can kind of keep looking for bigger and better projects. Are there going to be losers? Yeah, it's just going to be like SPACs, right? The SPAC craze, it was monsters. They're going to be some winners. There'll also be some losers, and there will be some companies that and some NFTs that probably go to nothing of value, just like there will be some of these SPACs that will be nothing in a couple of years.
Is that why you guys canceled the SPAC Attack show? It's now nothing like all these other SPACs. What'd you
I
do that
will.
for?
Well, I mean, one of the things with that is like always, right, Chris? One of the things is we do our shows for the audience, right? I mean, at the end of the day, that's what we do our shows. And if we don't get the appreciation that we need, like people smashing the like button, subscribing, and hitting the bell, that's what keeps these shows on, especially for free. Because at
Mhm.
the end of the day, Benzinga here, we don't charge a single cent
Hey,
for
and
our
in case
content.
anyone asks,
And
Benzinga doesn't pay me to come on here either.
yeah, we're literally giving you guys as much as we possibly can. Of course, I get paid by Benzinga, but that's where it ends. Literally, like we don't do that for the money. We don't charge for the content. And with SPACs, what happens? The waves came in and out, and the
Mhm.
waves didn't come back when we spiked again. Right? The waves. There is some SPACs that have done really great. I mean, just look at Lucid, right? Look at some of these MP. Look at some of these that are still up massively. I like a couple of these. RSI has been doing great as of late. There's plenty of winners there, but there's also plenty of losers. And one of the things that we need is you guys out there supporting the content. So definitely smash the like if you guys liked the chat here today about some story stocks. We talked about inflation. We talked about Disney Plus. We talked about the infrastructure bill. We also talked about some SIHIT coins, if you know what I mean. But definitely, guys, smash the thumbs up, support the shows, because if we're going to keep doing this on Benzinga, we're going to have Chris doing some live back testing. So if you guys haven't seen Christopher, definitely check him out. 10minutestocktrader.com. You guys can find him. Thousands, I think, almost interviews. I don't know how many you got, man.
Oh, dude. I even interviewed Tom Basso today, one of the market wizards. So that'll be out next Friday.
Hey, check it out, guys.
Awesome.
I definitely think Christopher's stuff is one of the best kind of content that you could be watching, especially on the weekend. You know, a lot of us traders, we're focused on our charts every second of the day. But when we get a chance to kick back and relax, let's listen to some other traders talk about how they trade. That's what Christopher does exactly on those podcasts. So check it out, guys. We'll see you next time right here on Money Mitch. Appreciate you joining me today, Christopher, and enjoy your weekend, guys, out there.
Thanks for having me.
All right. See you guys next time on Money Mitch. Let's keep it going. There's only one way. Work on your skills, guys. Keep at it. Smash that like button and realize that there's no one way of winning. Just like Chris and I have different strategies, you guys could have different strategies yourself. But one of the keys to it is figuring out some objectivity-ness. You know, one of the things is subjectiveness isn't going to help us too much, right, Christopher?
No, you have to be, at least for me, I'm so data-driven. And
this guy's more objective than I am. Dude. So I mean,
yeah, I mean, if it doesn't have like what I want to see in a back test, I don't even care. I just move on. And like, I'm not going to force it because I've lost. Mitch, if I had told you how much money I spent losing that I considered investing in my Wall Street education, it would make you sick. But at the same time,
it's a truth.
Worth every penny.
It is. And when it all comes back, that's when we realize, man, it was worth it. Mm-hmm. See you next time, guys.